Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive spinning top yesterday, capped overhead by the November 2020 low at 116.02 and the short moving average currently 116.03, and then supported below by the 2019 high at 115.70. In many ways, this was a metaphor for the constant intraday indecision that we saw late last week. Below we still have the 50% Fibonacci line of the March 2020 to January 2021 move at 114.92. Then target X in the 114.5 area. This is the potential target for the recent July to September bearish cat's ears pattern. Overall, we are still within the follow-on lower from this recent cat's ears pattern, plus more recently the weekly key reversal down from 2 weeks ago. Now in the cat's ears pattern, the neckline above is made from the combination of the 38.2% Fibonacci line of the March 2020 to January 2021 move at 116.94 and the neckline, currently 116.81, of the August to September 2020 head and shoulders top. Plus now we have the declining short medium moving average, currently 116.74, entering the market. All of this, as I've said for many weeks now, comes in the shadow of September's monthly key reversal down. Looking at the even bigger picture, we are still nicely moving down between the upper time, currently at 117.13, and the middle time, currently 113.43, of the January to May bearish Andrews pitchfork. This pitchfork has run the whole of 2021's actions. So far today, the market's pushed down below the limited support from the 2019 high at 115.70, but is not aggressively pursuing a move lower, just seemingly drifting lower. Cable, aka sterling against the US dollar. A long-legged but still indecisive spinning top yesterday. This comes after the previous three sessions made a 3-day bullish morning star pattern, which so far has not really seen a follow-through higher of note. We're now just over midway between the upper time, currently at 136.70, and the middle time, currently 133.25, of the early September to late October bearish Andrews pitchfork. We are also still quite a way below the broken lower trend line, currently 136.81, of the July to date sideways triangle. Meanwhile, below the market, we once again have the 2019 high at 135.16 and the September 2020 high at 134.83. These are now, I suspect, losing their value of support or resistance points. We also still have the targets down here for the very same July to date broken sideways triangle mentioned earlier. The initial target X is in the 134.90 area, has already been achieved twice, whilst the secondary target X1 in the 132.65 area is still out of reach. It is, as I've often stated, a harder target to reach, and I'm still thinking that perhaps just reaching original target X may have been enough. Well, we'll see. I'll keep that target X1 on for a bit longer, I think. A couple of final points. I've droned on internally about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on, and prices didn't. However, the late September to early October moved down, and last week's action revitalized the idea enough that I'd packed some potential targets for the pattern below. An initial target X2 in the 133.60 area, and a secondary target X3 in the 131.10 area. Now, so far today, a small move lower, and approaching the old 2019 high at 135.16. Euro sterling. A reactionary bullish harami yesterday after the previous session's bearish engulfing pattern. It was also much like Monday's action, capped by the slowly falling long moving average, currently 85.78, and supported by the combination of the flatlining medium moving average, currently 85.34, and the short medium moving average, currently 85.24. Now, admittedly, prices did not rise enough to test the long moving average yesterday, but the resistance and the cap is still implied. Finally, I'd like to say a few words on the reincarnated idea of the June to date expanding broadening wedge pattern. Now, I've been minded to look at the lower, shallower trend line based from early August as the new trend line, currently at 83.92 for this period, and I'm still seriously considering relabeling the chart in the next little while. So far today, a slightly higher open and then a move down to test the medium moving average. Interestingly, that's held. This opens the door to today being a possible bearish engulfing pattern. US dollar against Indian rupee. A combined bullish piercing line pattern and bullish closing white Mariposa yesterday. Quite a good example of both of those actually. The reason for the sudden move back up are simple and well telegraphed. They are twofold. The rising long moving average and the 50% the rising long moving average at 73.83 and the 50% Fibonacci line for the whole of 2020 at 53.84. What was also interesting was where the rise halted, at the overhead combined congestion of the flatlining short medium moving average, currently at 74.22, and the 50% Fibonacci line of the February to April 2020 move at 74.26. The medium moving average, currently at 74.29, was also there, and finally the broken downtrend and trendline combination of the April 2021 to date move, currently at 74.33. These were the quartet of supports previously seen late last week, trying to hold the market up and then failing. Going back for a moment to the previously mentioned broken downtrend and trendline combination of the April 2020 to date move, this trendline makes up the large April 2021 to date sideways triangle. This triangle, broken on the top side, originally gave some targets above which have since been retired due to lack of follow through higher. I'm now looking to see should I resurrect targets for this sideways triangle or wait to see another pattern emerge. So far today, an open in line with a dip to the lesser Fibonacci line at 74.07 before a strong attempt higher up through the short medium moving average and the 50% Fibonacci line at 74.26, even over the medium moving average and also through the downtrend. The recent action over the last 2 days can be seen as a potential pipe bottom, though it very much depends if we actually can maintain this move higher, because it looks quite good in that sense going forward. US dollar against the Brazilian real. A third bearish black crow. An interesting follow through lower to the previous 2 days homing pigeon pattern. Interesting because traditionally the 2-day homing pigeon patterns have been seen as bullish reversals. However, data indicates the opposite, with around 6 out of 10 times the action being a bearish continuation pattern. It seems today that the market is following the data rather than tradition. Additionally, the market moved and closed below the supports at 552.91 and 550.12, plus piercing the middle time, currently 548.20 of the late July to late August bullish shift pitchfork. The market eventually settled right on the middle time. As I've mentioned earlier, this pitchfork affords a more shallower bullish angle of attack compared to the recently broken bull channel. All this is in the shadow, though, of last week's weekly key reversal down. US dollar against the Mexican peso. A third bearish black crow yesterday and a second tentative exploration of the downside after Friday's long black Mariposa. The reason for this slow progress is that just below we have the beginnings of a wide band of dynamic support stretching currently from 20.2684 down to currently 20.0892. I've highlighted this band before because it's made up from a mess of moving averages below, consisting of the slowly rising short medium moving average, currently 20.2684, the flatlining long moving average, currently 20.18.5, and the medium moving average, currently 20.1407. With below all these the upper trend line of the recent broken descending triangle, currently 20.0892. Now prices, yes, they pierced the short medium moving average but still closed above it. Overall, it still leaves a question open as to whether the September to date action is a bullish halfway hesitation or a topping action. It also leaves open, though, with perhaps a seeming diminishing chance of success of achieving target X1 in the 21.23.5 area. This is the secondary topside target for the June to date descending triangle. One usually hard to reach actually. We've already reached the primary target X in the 89.20 area. This whole action last week in turning back down should be seen in the shadow of the weekly key reversal up made 2 weeks ago. Now so far today, a small reactionary open higher, but capped by the lesser Fibonacci line at 20.3382 and supported by yesterday's close. So not the biggest of resistances or supports, to be honest. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.